From today, you'll have to pay 1% TDS on transfer of virtual digital assets as per a new income tax section 194S, introduced in the Finance Act 2022. The TDS is required to be made at the time the buyer makes the payment to the seller. In its previous circular, dated 22nd June, the Central Board of Direct Taxes, that's CBDT, made it clear that onus of withholding TDS will be on the buyer, exchange or broker. Now, what is the update? The CBDT had recently issued guidelines with respect to the new section 194S. Now, there are some FAQs that might be there in your mind. We'll be answering all of that. First is, who will cut the TDS? In a peer-to-peer transaction, the buyer, that is the person paying the consideration, is required to deduct tax under section 194S of the Act. But if this transaction is between an exchange and buyer would be crediting or making payment to the exchange directly or through a broker. Now, the consideration for transfer of VDA shall be on gross basis after including GST or commission, or it shall be on net basis after exclusion of these items. Well, the answer to that is it will be on the net consideration after excluding GST or charges levied by the deductor for rendering the service. Now, in clause 47A, added to the Income Tax Act, VDA has also been defined, and as I teased right in the opening, that now we have a clear definition of VDA, because while the budget session was announced, there was mention of VDA, but there wasn't any clear definition. Now we have that. It's defined as any information, code, number or token formed using cryptography or other techniques and excludes Indian or any other foreign currency. Non-fungible tokens and any others that fit the same description are also included in this. Now, this is my part. We have to have a tax lawyer to decode all of this or discuss or take a deep dive. We have with us Sachin Jolly, partner DMD Advocates. He's a tax lawyer. A very warm welcome, Mr. Jolly. First question is this 1% TDS. I have seen several exchanges decode this for their customers. How is this calculated, if you can tell us in a layman's language?
Well, let me take an example, and I think that's the best way to explain it. Let's say the value of transaction is about 200 Indian rupees. The exchange levies a commission of 1 rupee. There is a GST of 3 rupees. And these are all hypothetical numbers because the GST council may come out with a higher number now.
Sure.
So 200 minus 4, which is 200 minus 1 as the exchange commission, minus 3 as the GST. 196 is the value of transaction on which 1% GST will be levied. So the buyer will have to deduct 1.96 rupees and pay it over to the government from the money that is remitting either to the exchange or to the seller directly, whatever the case may be.
Right, so that's how it will be calculated. Now, I also mentioned in our links, that an investor would be able to claim refund of TDS levied on transaction, but the ones which involve losses. What's that?
So again, let's take an example to, let's say I go and buy a Bitcoin. The value was $30,000 US. Today it's fallen to about 18,000 US dollars. Sure. So if I go and sell it today, the TDS is on the gross value of the transaction amount minus the GST or the commission, but the 1% TDS will be on the 17,000 value of the transaction, and that will then be paid on to the government. But when the recipient or the seller, as the case may be, files its income tax return, it will say, look, I purchased the asset for $30,000. I have sold it for $17,000. There is a loss of $13,000. So there was really no tax on this because the tax of 30%, like you said, is only on the income or the profit that you make. So the TDS which was deducted from the consideration will now have to be refunded. This is like any other situation where a businessman receives, or a lawyer for that matter, let's say, receives consideration for his professional services. There is a TDS on that. But ultimately, if the overall tax liability of the lawyer or the businessman is less than the TDS amount, then the balance gets refunded. That's how the provisions work.
And Mr. Jolly, in our last episode, we tried to decode the circular, which was quite long, I must say, and it had several points. But according to you, did they miss anything? Is there any grey area? Are there any questions still unanswered? Because you are a tax expert. Is there any grey area which is left?
Look, it's a new provision. It'll have its own teething problems. It's almost impossible to visualize all kind of situations and put it in a circular. Let's give the government some leeway.
Let's cut them some slack, sure.
Yeah. But I think one aspect which I believe I didn't see in the circular, and I think which is going to be a challenge in the future, and a guidance will be helpful, is when there is migration from one exchange to the other. That really is not a transfer or a sale. It is not an exchange either. What happens then? The circular addresses aspects of a direct sale, an indirect sale, an exchange, but it does not address the aspect of migration. Let's say, the Bitcoin or the asset, any VDA for that matter, is listed on an Indian exchange and it is migrated to a foreign exchange. What happens then? And will the foreign exchanges be subject to this withholding tax?
Right.
I think that's the second question. These are all aspects which are open today. Some clarity on that will always be helpful, especially for people who want to comply. I mean, see, there are rogue elements which will never comply, but people who want to comply, I think maybe in the next circular, some more guidance in the future.
Sure. I hope someone from the authorities is listening to you and watching this show and this reaches them. Thank you so very much for decoding all of that in such a simple manner.